Hey everyone, welcome back to Corporate Decoder, where we explore the hidden stories within company filings. And today we're looking at T1 Energy Incorporated. And let me tell you, this filing has some interesting twists related to governance and shareholder votes that are definitely worth unpacking. Before we dive in, make sure you're subscribed for more insights like this and join our growing community over on Discord, linked in the description below. This is a Form 8K filing, a current report that companies use to announce major events that shareholders should know about. Think of it as a company's diary for significant milestones or changes. In this case, T1 Energy Inc. is reporting on a few key things that happened around December 2025. First off, the company updated its bylaws. Specifically, they removed a qualification that directors could only be removed for a specific reason, what they call for cause. Now, this might sound like a small detail, but it means the board has more flexibility in deciding when to let a director go. It's effective the 4th of December 2025. Now, things get really interesting with the shareholder votes. They voted on several proposals. Proposal 1 was about issuing a significant number of new shares over 17 million shares. This often happens when a company converts debt into stock. We see here that they had over 95 million shares vote in favor of this versus about 2 million against. That's a pretty strong approval, indicating shareholders are comfortable with this dilution or see it as a necessary step. This proposal directly relates to that bylaw change we just talked about. It's about giving shareholders more power to remove directors without needing a specific reason. And look at the vote here, nearly 91 million shares for this, with only around 1.1 million against. This shows a clear shift in favor of greater board accountability or more agility in leadership changes. Following these shareholder approvals, the company filed a certificate of amendment to its certificate of incorporation. This officially puts those changes into effect. The amendments approved include establishing limits on foreign ownership of its stock to help with US tax laws, increasing the total number of authorized common shares to a massive 500 million from 355 million, and yes, removing that for cause requirement for director removals, meaning directors can be removed more easily. These changes became effective on the 4th of December 2025. On a more operational note, the company is also reporting a significant business update. They've signed a substantial contract for 2.0 gigawatts of module deliveries for 2026. On top of that, they have a total of 3.0 gigawatts of module sales already contracted at fixed margins for 2026. This suggests they are actively securing future business with predictable revenue streams. But to raise a more serious note here, in November 2025, both the company and one of its executives, who also sits on the board, received subpoenas from the Department of Justice. These are concerning as they relate to document production regarding stock sales by this individual in late 2023. The SEC also requested similar information. The company believes these stock sales were made using stock that was pledged as collateral for a personal loan, and that these transactions were in line with their insider trading policies. The company is cooperating with both agencies. It's impossible to predict the outcome or impact of these investigations at this stage, which always adds a layer of risk and uncertainty. Now, like most corporate filings, this report contains forward-looking statements. These are basically educated guesses about the future, often using words like anticipate or expect. The company is cautious, saying their actual results could be very different from these predictions due to various risks. They also mention the possibility of further delays in their financial reporting. Looking at the exhibits, we see the details of the third amended and restated bylaws, and also the certificate of amendment to their certificate of incorporation. These are the official legal documents detailing the changes discussed. Finally, the report is signed by Daniel Barcelo. He is both the Chief Executive Officer and the Chairman of the Board, a common structure in many companies, but it's worth noting he holds both top positions. The date of signing is the 5th of December 2025. So what's the story here with T1 Energy Incorporated? On one hand, the company is proactively securing future business with significant contracts for 2026 module deliveries, which points to strong operational momentum and a solid demand pipeline. The shareholder votes overwhelmingly support changes that grant the board more flexibility in director removal and increase authorized shares, suggesting management has a clear vision for future growth and governance, which shareholders broadly agree with. However, the elephant in the room is the ongoing investigations by the Department of Justice and the SEC, while the company states their cooperation and belief that the actions were compliant with their policies. Any such inquiry introduces significant legal and reputational risk. The outcome could range from nothing to substantial fines or other penalties, and it casts a shadow over the otherwise seemingly positive operational and governance updates. The market will undoubtedly be watching closely for any developments here. The increase in authorized shares, while approved, also means there is potential for significant future dilution if those shares are issued. So investors will need to keep a close eye on how that capital is deployed. In conclusion, T1 Energy Incorporated is navigating a complex landscape. They are demonstrating business growth and implementing governance changes that appear to have shareholder backing. But they are also facing significant regulatory scrutiny. Investors need to weigh the operational strength against the unresolved legal challenges. Alright, that is our breakdown of T1 Energy's latest filing. What is your take on these numbers and what they signal for the company's future? Do you think the business growth outweighs the legal risks? Drop your thoughts in the comments below. If this analysis was valuable, hitting that like button really helps us out, and subscribe for more deep dives into corporate finance and strategy. Don't forget to check out the Discord community linked in the description for more discussions. Thanks for watching. See you next time.